Hi guys, and welcome to this week's edition of our mentorship video. Yes, I do understand it's been a while since I dropped a mentorship video. Things have been happening, but be that as it may, let me not waste much of your time, guys. So today we're going to look at dollar index. We're going to have a detailed analysis of the American dollar, and I'm going to share my thoughts on what I expect the dollar to do for the second half of the year. We're now in the beginning of August. We already have a month that's gone, which is July, and you can see July has been bearish on dollar index. It has been bearish, but not by much. We broke a little bit out of this consolidation right here. You can see we broke out of this consolidation, right? So understanding where dollar is likely to trade to is going to be crucial in your thoughts on a bias for, say, Euro USD, Pound USD, say the majors, right? So as much as you all know what to look for, things that should give you a guide on directional bias, there's also the aspect of interest rates, right? Remember when we began the mentorship, or probably in the first week of the mentorship, we do have a topic that covers interest rates, right? So that should give you a guideline on how you should approach the markets going forward. So for the rest of the year, the topic is going to be about the Federal Reserve. When are they going to cut the rates? It has been a topic since the beginning of the year. I do believe now it's inevitable. We are going to see a rate cut probably on the September meeting. The September meeting, prior to that, would have had two job reports released. We already had one on Friday, and we are going to have another one the beginning of September, before we get Powell and company come on the calendar. So with that in mind, it's a case of understanding where should we be looking for dollar to trade to. I do believe dollar is bearish, right? We've had some months that were bullish, 1, 2, 3, 4. I think this is what, January, February, March, April. We've had a bullish dollar, but not by much. You see, dollar was just trading back into this range here, right? Into that fair value gap. This is where dollar was trading into, right? Into the fair value gap, right? So with that in mind, right, looking at dollar having traded into this gap here, right? Let me just highlight it quickly. Let me just highlight the gap that I'm talking about. So you can see we had a fair value gap there between the month of December and October 2023, and that is where price traded to. It went all the way into the bearish order block, right? With that said, you can clearly see we haven't cleared last year's high, right? So this is last year's high in October. That came in October. We didn't clear that up, right? Because it's an election year. Number one, interest rates. The talk of the town is when the Fed is going to cut the rates. As much as dollar has been bullish, but clearly this year we are going to see a bearish dollar. It's my second time now that I'm recording this forecast on dollar index. The first one I did it, I think, beginning of the year, I think February or March, when I emphasized that dollar is bearish. Now this is for a long-term analysis, guys. For those who are looking to get into positions where they are going to hold the positions. Yes, for short trades, for scalping, we have to rely on the bias that we are seeing on lower time frame. As you can see, I'm on the monthly chart, right? So with dollar having traded to the higher time frame premium area that we had since the beginning of the year, and then after that there was a consolidation. March, April, May, June, we had a consolidation right here. Price was consolidated. Then July we saw a breakout to the downside, right? We saw a breakout to the downside on dollar index, and you can already see August is looking ominous to go to the lower side, meaning we are bearish on dollar. Now if you are going to be looking for opportunities, say in the coming week or 2 weeks after, 3 weeks after, it's important that you keep an eye on the calendar. Like for example, the coming week, of course, we've got Bank of Canada, we've got Canada on holiday, that is tomorrow, and then we've got just going to look at the majors, service PMI for the pound, and then we also have service PMI for the dollar. That's in the afternoon. New York Open, crucial, right? So tomorrow is actually a good day to trade. I don't usually advise people to trade on a Monday, but tomorrow is actually good. Anytime after London lunchtime, right, you can participate in the markets. Then on Tuesday we also have RBA rate decision. They're going to keep their rates, they're not going to change unless something else changed that I'm not well aware of. Then we've got construction PMIs for the pound. We don't have much in terms of the dollar, but we've got the Atlanta Fed GDP. This is crucial in terms of giving us a guidance of the GDP, right? Then on Wednesday we've got crude oil inventories. They don't really make much of a difference in terms of directional bias or the trend. Same applies with Thursday. These initial jobless claims, these are weekly reports. Then Friday, what do we have? We don't have much. So tomorrow is actually a day that could set pace for what to look out for in the coming week. So we're talking of from the 5th all the way to the 9th, right? So that's the calendar. And another thing, right, is your COT report. There is a time, I think the week of July the 16th, if I'm not mistaken. I even mentioned it on the group, right, where we had a huge decrease of open interest on dollar index, right? That's July the 15th. Prior to that, we had an increase of shorts the week of 18 June, a month ago. There was a huge increase of short position, almost like doubled, right? The commercials doubled their short positions on dollar index, and all along they've gradually maintained their holdings, except that they increased the position to 25 and then increased again to 26k, and then they took profit, increased a bit and then took profit. So looking ahead into the coming week, open interest did not change by much, only negative 1.1%. So what you have to anticipate from the reading of those numbers and from what we heard from Powell last week, Wednesday, when we had FOMC, expect a reprieve on dollar index from the drop that we saw on Friday. Expect a reprieve in price. That means you need to be in a position to identify your premium area on the lower time frame, say weekly, daily, and H4, that are going to help you in looking for short positions, right? So the areas that I've marked here, these are the areas that have already provided us with a context, with how we can approach the markets. You see, they've already offered opportunity, this fair value gap and this bearish order block. Okay, let me mark it out. So that's our bearish OB, right? And then we've got fair value gap right here. So these are all on the monthly, right? So that's our monthly fair value gap high, right? And inside that array we had a formation of a monthly bearish order block. Now this is going to be crucial now in terms of shorting opportunities. This is going to be crucial. It's going to help you in providing opportunities once price comes back to that level. That's on the monthly chart. And in terms of where is price being drawn to, right? Firstly, we've got this old low here, right? Price is being drawn to this old low. Let me mark it out properly. Price is being drawn to an old low. Then ultimately this down close candle here, and you can see this old low is most probably equilibrium point of this last down close candle, which is our bullish order block. So that's where price is being drawn to. Price is being drawn to that old low. Let me just mark it here. So that's our old low, which has got internal range liquidity, sell stops, right? So we've got internal range liquidity of sell stops below this monthly old low of March. So price is being drawn to that level. We've got liquidity. Ultimately we should see the low of December 23 and also the low of July 2023 as ultimate yearly targets. Being an election year, expect the dollar now to move lower. We are heading towards the November elections, and the data that is coming out of the United States right now is not so good in terms of the dollar. If we are just to look at last week, for example, let's see. If we are to look at last week, so that's from the 30th to the 2nd, right? If we are to look at last week, we had quite important news for the dollar that did not meet expectations. Price did not really come out as expected. We had ADP. We also had employment cost index missing targets, and then we also had, there is a crucial one that I'm looking for, and I was following these guys here, the manufacturing ISM manufacturing. This number missed big time. ISM manufacturing PMIs. If you go to the weekly chart, to the daily chart, you can see the opportunities that were given by this negative release of these PMIs. Let's go to daily. You can see right here, this is what I'm talking about. This level here where we eventually had a move to the downside, and then ultimately we had NFP on Friday. NFP on Friday was the catalyst for now a huge drop to the downside, which is right there. So you can see that the data that is coming out of the United States is not that convincing. It's not that promising in terms of whether we're gonna see bulls coming back into the picture or maybe a bit of consolidation. Right now price is going to the downside, so it's a case of highlighting your premium areas where you're going to take your short opportunities, targeting discount areas. Right now on the monthly chart we only have one discount area, old low, right? That's where price is being drawn to. We've already highlighted the monthly bearish order block right here. If price does retrace back to that level, it's a good area for a shorting opportunities, targeting 102 level, right? So when we go to the weekly chart, right, now on the weekly chart you can see this is our old low, our monthly old low, and just below that, right, just below that we've got this fair value gap right here. I'm gonna extend it right? This is in discount now. So this is now weekly FVG, right? Then we've got a bullish order block right there. So we've got a weekly bullish OB, right? So this is where price is getting drawn to, right? But remember, price is fractal. You cannot just get drawn all the way just like that. There's gonna be retracements, right? Redistribution into fair value in the form of a premium array. We're going to get redistribution into fair value before another drop to the downside. Now if you look at Friday's last week's weekly candle and the previous one, right? Let me get rid of these two here. That was just me emphasizing where price is likely to head to, right? If we zoom in, right, we can see how price dropped. So we had a drop base and then another drop. So if you look at 2 weeks ago, we had this low here, right? Now this low is crucial. Once we get next week's candle, which is going to open in a couple of hours now, we're going to get a fair value gap right here, right? Now that fair value gap is what you mark out, right? Just going to put an imaginary one. It's what you mark out and in anticipation for price to come into that fair value gap before another move lower, you see, targeting that old low. So depending on where the weekly candle would have opened at, which I'm not sure where it is going to open. Market is probably going to gap with all the events that have been happening in Middle East. Market is probably going to gap, whether to the upside or downside, that I'm not sure of. I'm just going to wait. Once that weekly candle open, we can get a guideline when the yen futures market opens, because they open early. We get a guideline on whether we're going to gap up or gap down on dollar index, right? So that's the illustration that you need to keep in mind. The gray shaded area is an example of where I anticipate a fair value gap. Right now we only have the old low from 2 weeks back. See, we need the weekly open or the weekly high that we're going to get tomorrow for us to have a bearish fair value gap, for us to look for shorting opportunities. If we go on to the daily, right, focus on that last week's low that I highlighted, 2 weeks low, which is this candle here, right? So then this was all last week. We've got a bearish order block, right? You can see that bearish order block is right where the high of the imaginary fair value gap that I had highlighted on the weekly chart is, right? So we are going to get a Monday candle. Once we get a Monday candle, there's going to be a fair value gap. It's going to be high probability, because it will be accompanied by what? By a bearish order block. So this bearish order block is now a high probability OB for what? For shorting opportunities. So this is what I'm looking for dollar to do in the coming week. That's my expectation in terms of where dollar is going to head to in the coming week. Market can open and then drop and continue all the way going to the downside, but there's gonna be a time when it redistributes into fair value. Right now we already have fair value on the daily, which is a bearish order block. We just need another daily candle, tomorrow's candle, to open, and whether it closes, we don't know. We wait for it. Then we've got a fair value gap, right, which is going to make this bearish order block high probability, right? So yeah, this is what I'm anticipating for dollar index to do in the coming week. I'm looking for shorting opportunities on the dollar index, but ultimately, whether it's on the weekly or on the monthly, I'm looking for dollar to head lower. Dollar should trade to the downside for the rest of this year, we should see opportunities to trade to the downside. Meaning, when we go to currency pairs like USD CAD, right? USD CAD, you'll be looking for shorting opportunities. Tomorrow, Canada is on holiday, it's a bank holiday. You can see price is hitting some old highs on the monthly chart. Chances are very high we're going to see a move lower, right, after clearing this external range liquidity on the monthly chart. We should see price move lower. Then when you look at CHF, you can see already it has moved lower. Right now price is being drawn to this old low here, December low. That's where price is being drawn to on USD CHF. So shorting opportunities are ideal. And if you have to look at this monthly chart, you can see how we broke this old low here and we are continuing moving lower. If you come to a weekly, we've got this low here. There's going to be a fair value gap right here. Yeah, it has dropped quite aggressively. We should see a bit of a redistribution before another move to the downside. Same applies with UJ, though I'm not a fan of UJ at this moment in time. We did mark out that old high there. I'm not a fan of UJ, but yeah, we should see further moves to the downside on UJ. Then Euro USD is going to be the opposite. Price is going to move to the upside. The price is being drawn right here, December highs, 1.11323. That's the draw on liquidity from discount, right? From discount, we already have weekly bullish order block right here. Price should clear 15 July high in the coming weeks. Same applies with NZD USD, looking for price to move to the upside. Also pound USD, I think we've got some important news tomorrow. We've got PMIs for the pound. Let me see, tomorrow this week. So we've got PMI for the pound, saves PMIs and composite PMI for the pound tomorrow morning, if I'm not mistaken. Yes, tomorrow 10:30 a.m. We've got saves PMIs and composite PMIs for the pound. What are the estimates? Looking at 52.7, that's the estimate. Previous was 52.3. If we do meet this, then it's bullish. 51.9, previous was 52. No, this is euro. Saves PMI 52.4, previous was 52.1. So you can see the forecast is a higher number. If we do meet this number or anything above, then we're going to see a bullish pound to start the week. We're going to see a bullish pound to start the week, and you can see already pound is in discount, right? Pound is already in discount. You'll be targeting internal range liquidity of buy stops above previous week high. If I go to the weekly chart, talking of this high here, let me zoom in. Talking of this high right there, so I'm gonna go to the daily chart. See, so that's the target. You'll be looking for price to trade above that high. That will be your weekly target for longs that you'd have taken in this discount array. Same applies with also, which one if I not missed, Aussie dollar. You're looking for price to go to the upside, looking for a bullish move. Now for the rest of the year, we should see a bullish move. And if you look on the weekly chart, we've got a bullish order block there on the weekly chart. Proper opportunity zone for you to look for longs. It's going to be reaccumulation in that area. If you go to the daily, you see this is the zone that we are talking about. Once price reaches here, you're looking for price to move to the upside. Where is your target? This imbalance on the weekly chart. This will be your target on the weekly chart, internal range, liquidity off, buy, stops. So yeah, it's not much of a difficult scenario, though it's a bit tricky once you are there, once you're looking at those charts, understanding what to do. We all fall to that habit of wanting to look for opportunities everywhere when we are trading, but try to stick to your narrative, right? Try to stick to what you have analyzed before you go to the charts. Try to stick to that, and you see that you're going to reap the benefits of your analysis. So just to recap, we are looking for shorting opportunities on dollar, which in turn gonna provide longs on euro, NZD, pound, and AUD USD. Shorting opportunities ideally on USD CAD. USD CAD, between the three of them, as in USD CHF and USD JPY, USD CAD is prime for a move lower. Mark my words, USD CAD is primed for a move lower. So yeah, that's pretty much about it, folks. I hope you have picked one or two that you can use in your own analysis. And for those who are not in a mentorship group, if you want to join the mentorship group, just hit up a message and I'll definitely get back to you. And for those who haven't subscribed to the channel, please subscribe and share the videos, guys, so that we get the word out there. We share with other traders how to clearly trade the markets and how to sustain your career in trading. It's not about your moving averages or indicators. We purely price based action traders. We use smart money tools. Indicators, they are lagging. That's the only disadvantage to it, but I'm not saying they don't work. They do work, but for other type of traders. So yeah, if you haven't liked the video, like the video, share with your friends, post it on your social media. If you haven't subscribed to the channel, I urge you to subscribe so that whenever I upload a tutorial or a free tutorial, you get a notification, then you can enjoy the videos. So yeah, that's pretty much about it, gents and ladies. I wish you guys nothing but the best in your trading. Thank you.